An ugly stock market correction has arrived because of recession fears, but a big bear market rally could be on its way. Not only this though, a major world order shift is beginning as the US buddies up with Russia, isolates Canada and Mexico. This is indirectly causing Europe and China to again come closer in relations. The geopolitical shakeup has been so fast and furious that it will have major implications for the years to come. Now in this video, we'll talk about the economic and market conditions that have gotten so extreme from tariff fears and government cost cutting that there are rumors that there could be more rate cuts from the Fed and stimulus checks for American consumers later this year. Now, over the past several months, I've been in Hong Kong and China studying their local economy. China's economy is advancing like we've never seen before. EV cars from BYD are all over the streets. Xiaomi EV cars are looking stunning. Unlike the doom and gloom that we often read in the media, I came back with the impression that the travel and entertainment industry in China was booming very hard. Why am I mentioning China up front? It's because I think that a capital rotation out of the US and into China is a very large reason and catalyst behind the US market weakness this year. China and also Europe is rising, whereas the US is staying stagnant. So why have US stocks fallen so much after a pretty decent start to the year? Well, there's multiple catalysts for this, and given that the political atmosphere is such a driving force for markets, I will be talking about more political developments on my channel in the future. So it all began to take hold for the bears in mid-January when DeepSeek claimed that they could make AI outputs at a fraction of the cost that big tech companies were spending on it. And while it's not frequently discussed, DeepSeek turned out to be the ChatGPT moment for China stocks that sparked a massive rally higher for Hang Seng tech stocks. See the video I made last year on China stocks for the Hang Seng having a big potential 2025, and now it's happening. Up until this point, the reason US stocks have done so well is because of the concept of American exceptionalism. This concept comes from the fact that our political policies are stable, our tech industry continues to make breakthroughs, and the US dollar is the world's reserve currency. Confidence around political stability, though, began to unravel as Trump began following through on his tariff threats on Canada and Mexico and the rest of the world. Lately, Trump is talking about tariffs almost on a daily basis, tariffing everyone, everywhere, everything. And tariffs are changing the way investors view the economy as previously a safe haven for investment. Because there's been so much going on, I just want to give a quick recap on what the tariffs have covered so that people aren't confused with the situation. There's been a 25% tariff on all steel and aluminum products. This hits major suppliers such as Canada, Mexico, China, the EU, Brazil, and South Korea. Earlier in February, President Trump signed executive orders imposing a 25% tariff on all goods imported from Mexico and Canada. On top of this, an additional 10% tariff has been applied on Chinese goods for a total of 20%. Let's talk about the big picture economic implications of this. Well, all the US indices, the Dow, the S&P 500, and the NASDAQ have entered correction territory because of the Trump tariffs and uncertainty around it. If the 25% tariffs on Mexican and Canadian goods persist through the end of Trump's term, a lot of analysts think that this could lead to a loss of about $2,000 in purchasing power for each American household. Research institutes estimate that household expenses could rise by approximately $2,600 annually, and here the estimated increase in cost by category. Automobiles, up 12%. Groceries, 8% more expensive. Home appliances, 9% more expensive. Electronics, 10 to 15% more expensive. And it's expected that tariffs could reduce Mexico's economy by up to 16% because of the US accounting for such a big percentage of Mexico's imports. Now, 2/3 of US veggie imports come from Mexico. Here are some data points on how the market has reacted to this so far. The Mag 7 stocks, they're all down 20% from all-time highs. Semiconductor stocks that power the AI trade are down more or less than 30%. The big investment banks like JP Morgan and Goldman Sachs, they're down more than 25%. The big credit card companies, American Express and Visa, have fallen 15 to 20%. Small and mid-cap companies have fared much worse. Many of these stocks are down 30 to 50% over the last 3 months alone. Meanwhile, gold has reached $3,000 per ounce. But it isn't just tariffs that's causing concern for American citizens. There's a lot less government spending going on. Trump and his team call this a transition period. It's a signal that we're going from big government spending to fiscal austerity. Trump even signaled that he wants interest rates to come down, most likely so that he can refinance the federal debt at lower rates. Now, along with tariffs, DOGE, the Department of Government Efficiency led by Elon Musk, has created massive uncertainty. Federal workers have been targeted by extreme cost-cutting measures. I want to give a quick recap of the layoffs that have been happening so that you understand the nuance. DOGE has implemented some really serious layoffs across several federal agencies. Let's talk about the Department of Education. Under Secretary Linda McMahon, they announced terminating nearly half of its workforce, affecting almost 1,300 federal employees, and there's more downsizing of federal departments to come. There are also plans to dismantle certain federal agencies entirely. Take a look at this. Earlier in mid-February, the Office of Personnel Management told agencies to terminate most of the estimated 200,000 workers hired within the last year who are still on a probationary period. And this led to significant layoffs across multiple departments, such as the Department of Veteran Affairs, 80,000 jobs, getting all the way back to its 2019 staffing levels. The National Oceanic and Atmospheric Administration, 880 employees laid off, representing over 7% of their workforce. The IRS, laying off over 45,000 employees and relocating a lot of these personnel to assist with immigration enforcement. The Center of Disease and Control and Prevention, the CDC, laying off 1,300 employees. The Environmental Protection Agency, laying off 170 employees. So as we can see, just massive chaos and a shakeup happening at the federal workforce level that we haven't seen in a very long time. But there is some potential big good news. Now, this is only a proposal, so we don't know if this will actually happen, but Elon Musk has proposed redistributing 20% of DOGE's projected savings to American citizens in the form of $5,000 stimulus checks. This proposal aims to share the benefits of government efficiency directly with the public. That's right, from all the chaos that's happening right now, Elon wants to see if these savings from cost cutting can be redirected to American citizens. That would be a bigger check than the COVID stimulus checks that we saw in 2020. If he gets that proposal through, that would be a huge positive game changer for the economy. So what do we make of this? Where are the opportunities in the economy and the stock market right now? I'm going to talk thematically because prices are constantly moving, but in a general trade war, largely speaking, nobody wins. Even bears could get caught up in violent bear market rallies. What we need at the moment is for tariff talks to stop and watch political developments very closely for a tone shift. This is a day-by-day market where one day's sell-off can turn into next day's sharp relief rally. Now, bigger picture on the stock market, I see a couple things. This is longer-term commentary and isn't designed to predict what's going to happen tomorrow, next week, next month, because nobody knows. Now, I think the AI trade is only mid-cycle, meaning that we haven't seen the ultimate peak in semiconductors like NVIDIA. Now, despite the chaos right now, I also see the S&P 500 reclaiming this year's high. In other words, I don't think that we've peaked for good this year. I do think that we get back there later this year, but it will have a lot of volatility in between. I also see the NASDAQ also reclaiming this year's high. If anything, I think the NASDAQ recovers faster and bounces back in a stronger way. The Dow is more sensitive to tariff talks because it has a lot of consumer staples like Walmart inside and Procter & Gamble. But that being said, if tariff talks fade, I also see the Dow playing a nice rebound. Outside of the US, I think Hong Kong's Hang Seng Index will reach 25,000 this year. In a previous video where I talked about China stocks, when the Hang Seng was still 21,000, I said that Hang Seng could reach 25,000 within 18 months. This index is now at 24,000. The Hang Seng is on fire this year. Policies from China's most recent Two Sessions meeting indicates that they're more investor-friendly than in the past. And because there's currently capital looking for alternatives to the US, I think Europe could look attractive on the next 5 to 7% dip. Right now, it is a little bit too elevated. On the economy and macro, here's what I think. Businesses are having a really tough time planning into the future. And this means that there could be more job losses later this year. If you're an employee, it would be super valuable to your employer to be multifunctional. A lot of organizations that depend on federal funding are now going through mass layoffs. This means that we could see this reflected in future job reports in the coming months. Government job growth is a big role in non-farm payroll reports that come out each month. So that means the first Friday of every month, when jobs data comes out, we can expect a lot of stock market volatility, especially because of the mass layoffs recently happening to federal employees. Ultimately, I see signs that there are going to be a lot of layoffs later this year. Obviously, I hope I'm wrong on this. Now, for specific stocks and setups, I discuss this more inside my Substack and WhatsApp community. My social media, Instagram and Twitter is in the description below, where I periodically comment on these topics. Look, folks, the political atmosphere is heating up, and there's a lot of opportunity out there right now. In future videos, I'm going to talk about more political developments that's happening, geopolitics, what's shaping the world order. I'll also talk about the housing markets and the rapidly changing economy and how it will impact you. Now, as Mark Twain once said, worrying is like paying a debt that you don't owe. So at this particular moment, when there's so much uncertainty and so much chaos, we need to focus our energy to staying positive as much as possible, because better times lie ahead. Thank you for watching. Have a great day. This is just another cycle, and we will get through it. Please subscribe, turn on the bell, and I will see you next time.